Well, hello and welcome everybody out there in Facebook and Instagram and YouTube. How are you all doing tonight? This is Apostle Helena Horsley with Thursday Night Live at 5. I know it's been a long time since I've been up, but we're here back again, and this is something that we all need to be talking about. Before, I was doing a lot of relationship series, and it dealt with many types of relationships, not only husband and wife relationships, but also family relationships, relationships with others, and also in churches. So we were dealing with relationships because that's one of the key elements of our lives. And so right now, hi Deanna, we see you came on in. I'm glad to know that we are live and you're picking us up through the YouTube. Good. I'm glad to see you there. So anyway, you want to share this broadcast, share it. We do have a very important topic that we want to discuss tonight, and this is the death talk, the talk we all need to have. We have all lost loved ones unexpectedly. I mean, either any type of way we lost them, it was something that we really just not prepared for. There is what's called anticipatory grief. Sometimes we are waiting for things to take place and we don't know when that time will be. Um, Especially when you have loved ones that have had sicknesses for a long time and had to have home health care needs or things of that nature. So you're watching them slowly digress. And so that's a hard thing to see. And so, in any and all, you love your loved ones, and we know that we want to see them all the time. But one of the true things of the matter is we are all going to leave this place. We're all going to die. That's something. There is a dash. It's a time of your birth, and it's the time that we die. So there is an expiration date for all of us. And so what we want to do tonight is we have a special guest, our Frida Moore Jones, who is here tonight. She is the financial professional that's going to give us some information on what we need as a people, because a lot of times things and information that we've had before is not the right information that we need going forward. We need to learn to change our perspective. Okay, it's about changing our perspective about the needs and the quality of life that we would like to have when it comes to financial information that we need for our families. So we need to have financial resources. We need to be prepared. We need to be educated. We need to know where these things take us, because insurance is not just for a death benefit. There's other things that go along with the insurance. But I have this special person here. This is the expert that I go to because she is my insurance person. So I'm so glad that she is my insurance person. So I can welcome somebody that I know. I can welcome somebody that I trust. I've known her for years. I mean, long time. I mean, way past over 30 years.
It's
And
been a
so
while.
yeah, long time. And so I just want y'all to be comfortable knowing this trusted woman. She is a woman of integrity. And I don't invite people on my show just because I know them. No, I know her. And she has an integrity. I didn't even bring up who she is in Christ. You should just know that she is a sister in the Lord. But none of that matters right now, because what matters is she has the information that you need. And everybody needs to be taking notes tonight, because she's going to give us the information. I had invited her to our family reunion, and that's why this is important. I invited her to our family reunion, and things got a little chaotic, so we just hugged and said we see each other later. But we
Right.
thank God that we are here tonight, because it was that important. I wanted her to talk to my family members, because we had just recently lost one of my cousins, my first cousin, and it was unexpected to us. Okay. And so there are some things that she was explaining to me, especially with certain diagnoses. There are certain types of insurances that you can purchase and you may not know it. So I'm going to turn this over to Alfreda, but we do have the chat open. So if you have some questions after you listen to what she's saying and you want to ask her some questions, please add your information in the chat. Okay. All right. So we're going to turn it over to you. Alfreda, why don't you introduce yourself and just tell us what you do?
Absolutely. Thank you so much, Apostle Helena. I am so grateful for you trusting me and just believing and trusting that I am a person of integrity, because that is so important to me more than my professionalism. Integrity is just it's trustworthiness to me, because I often say that most of my clients, and this is the truth, most of my clients are people that are family members that I know, that have referred me, and they know where to find me if I do something crazy. So I'm not trying to have anybody look for me because I did something that, that was totally out there and crazy. But this conversation is so important, so important. And we all want to be prepared when something happens. It's just imperative. And as I began to research, because as I was speaking with you earlier when we were talking about, doing things before death, I just began to think about, as African Americans, as minorities, the way that we view, as you said it before, it's so important that we change our mindset around certain things, and especially around preparedness, what we do for our families, how we take care of our families, how we take the burdens off of our families. You
Mhm.
will not believe the things that I've heard people say for the reasons that they don't have life insurance, that they don't have disability, that they don't have all of these things that will protect you and prepare you, not only your family in death, but yourself as you go forward in life. And it just always floors me. But what I really believe is that people want to take care of these things, but they're afraid of the costs, and they're afraid, that they won't be able to afford it. And if you sit down with somebody such as myself, we can help you make sure that it's affordable. But here's the thing that I want to talk about, and I want you to ask me whatever questions that you want to ask me, Helena, because I want to know from you as to what kind of information that you definitely want me to relate to people, and I want them to ask me questions. But one of the things that I really want to help people understand, especially as Black people, when it comes to life insurance, what we have been taught regarding life insurance down through the generations is that life insurance was a death benefit. Life insurance provided a death benefit only. You get life insurance for burial purposes, for funeral purposes, and that is part of it. But here's the thing, historically, we were systematically steered towards it as a small policy just to take care of those things. And while they were having that conversation with us, and here's what we would say is, you don't want to be a burden on your family, which you don't. While the other conversations they were having with other people was, do you want your families to continue in the lifestyle that they are accustomed to? Do you want to be your family to be able to live in the houses that they live in, to have the money that replace your income? So while they were having those conversations with them, they were having these conversations with us. And not only that, insurance companies were, when Black families back in the 1700s started to understand how life insurance could really help their families, started buying it. Large amounts of them started buying it, and insurance companies, in order to not have us transfer that wealth, started rating policies. This is where rating of policies came from. So they used our ethnicity and the fact that African American people were dying at higher rates than other people were, not taking into account the systematic things that they were doing to us that were causing us to become, not live long, the way that they, the way that we had food access, the way that they treated us, all of those kinds of things. But then here's the thing that is a lot more interesting as well. So this caused Black professionals, those that had money, to start life insurance companies. And they changed the conversation a little bit, but still not the same conversations that other people were having. And so that is the mindset that we have now. A lot of us, not all of us, but a lot of us see life insurance only as a death product. And so what people will say to us, just bury me in the backyard. I don't need life,
Mhm.
you know,
Mhm.
I don't need life insurance because I'm not trying to make anybody rich. Well, life insurance is not going to make anyone wealthy. It'll give them a head start, but it's not going to make anybody wealthy, honestly, unless you have the money that Oprah has. Then you can make somebody wealthy.
Okay.
You know what
Mhm.
I mean? Because
Mhm.
even today, in this day and time, if I have $1 million policy, how long is $1 million policy going to last?
Okay.
With what
Mhm.
we know educationally. So
Right.
unless we're transferring knowledge with that wealth, we're not transferring wealth. We're just transferring some money that's going to last for a little bit of time. But still important to be prepared. And one of the ways to be prepared to make sure, because we never know when we're going to die. Just like your cousin that you mentioned, her family never thought that she would, your family never in a million years would have said 10 years ago that she would not be here today. Never. So
Mhm.
it's imperative that we're, and it's imperative also that we understand that having it at work is not enough, because
Mm.
you could get sick, work, your benefits not pay, your benefits, you not be able to pay those benefits, and you don't have those benefits when it's time for when something happens. You
Right.
could, lose your job, be just like we had these mass layoffs here in these last few years, lose your job, your life insurance stays where it is. Now,
Right.
you don't have that. You transition, you retire. Now it's too expensive and you really can't get it. So getting it early when you're younger, getting it when you're healthy, getting it when you can afford it in a way that the premiums don't skyrocket is is the most important thing that you can do. And that means planning, that means sitting down with somebody who takes into consideration everything, takes into consideration your salary, your needs, asking the question, what income do we need to replace if something happens to you today? Not if something happens to you when you're ready to die, but if something
Mm-hmm.
happens to you today. That's the question that we want to be asking. If something happens to me today, what would happen?
Mm-hmm.
Because a lot of times we think about life insurance, we think about when we die. I'm going to die at 65.
Mm-hmm.
That's the mindset we
Right.
have. Yeah, but
Right.
we want to think it in terms of income replacement, not necessarily just final expenses.
Okay. Okay.
Okay. Yeah. So then the other thing too is having life insurance again is not just enough to have life insurance. That's another reason for sitting down with someone such as myself. I'm not going to just sell you life insurance when we're talking about life insurance, unless you just specifically want life insurance, and that's all we can talk about now. I'm going to talk about the life insurance with you with the mindset that later on we're going to come back and we're going to talk about other things. For time, case in point, when you retired, we picked up a phone and said, hey, how can we help in retirement? How do we want to move forward in some of the things that we can help you with in retirement? I do
Right.
annual reviews with my working clients, with people who are still earning an income, because things change with you. So the life insurance may, need to tweak a little bit. You may need to now start thinking about how you're going to move your money out of retirement. You may need to start thinking about disability. Do you have that at work? You may need to start thinking about long-term care. People are living longer. Long-term care plays a big role in in all of that as well. Life insurance beneficiaries is very
Mm-hmm.
important. If you have not looked at your beneficiaries for your life insurance, I admonish everybody to make sure that you update your beneficiaries, especially if you're married or if you're divorced or if you have grown children. Just make sure that the people that you want to receive that money is receiving that money. And at work, make sure you have the right beneficiaries at work too. We have horror stories of people who were married and had their husbands or ex-husbands as the beneficiaries and never changed that. And guess what? Their
Mm.
married partner did not receive that insurance because they were not the
Mm.
beneficiaries. It didn't matter if you were married 15, 20, 30 years, a beneficiary on something, the common law laws doesn't apply if
Right.
somebody names a beneficiary. So none of
Mm.
that stuff applies. Be careful when you're naming children as beneficiaries, because you need to know that children cannot access a life insurance proceeds until they turn 18. So if you have small children and you divvy that money up between your children because you think, my husband's not going to be responsible, give it to my children, or you're thinking that they need to be older, they'll be older when you die. When you die, that money will sit in an interest bearing account until they turn 18. And
Mm.
who's left to take care of them? Whoever there is their guardian. And, we want to make sure that our children are being taken care of as well. So another thing that I like, and so there are different types of policies. So there are the policies that you have at work, which are group policies. And these policies, typically you get a group rate. So they cost little of nothing. You can probably purchase $50,000, $200,000 for a couple of dollars a month, $10,
Mm-hmm.
$20. Sometimes your employer even pays for that. I tell everybody, get those policies because it doesn't make sense not to get them. because they are so inexpensive and they come right out of your paycheck. You don't even think about it. So that is the easiest way to get life insurance. Again, you don't want that to be your only life insurance, but I would definitely get it because there's an advantage of having it. And then there is what we call term life. Term life is exactly that. You pay for it for a specific term. And for that specific term, you have a guaranteed premium. So if it's 10 years, 5 years, 20 years, your premium doesn't change unless that's the type of policy you have. Those policies aren't that popular now, the flexible premium terms. So normally if my premium is $25 a month and I have a 20-year policy or a 30-year policy, it's going to be that amount for that specific time. So it locks in that premium and it locks in your insurability for that specific time. Most of them. I'm going to tell you about what we offer in a minute after I explain the other. So that's a temporary policy. The other policies are permanent policies, which is a whole life and a universal life policy. They're different in the way that they perform and in the way that you not purchase them, but in the way that the premiums are. So whole life policies you can buy to where you pay, and the premium again is set for life, typically in a whole life policy. So you're either paying for it to age 100 when it does what we call endow. So that means that a whole life policy will pay a death benefit, or you could leave it there and just let it grow until the person passes, or at age 100, it's at full maturity, at that full death, and you don't owe any more premiums. You can condense those into 50-year pay or 25-year pay, so you can pay it up at a certain time. Those are called custom policies, but your premium, the thing to remember is that your premiums never change. Your death benefit can change if a company offers dividends and you use those dividends to purchase more insurance. So your death benefit can go higher. You have policies to where your policies, if you look at the statements that we send you, you'll see that the death benefit is slowly increasing because of those dividends that you have in your policy. So those, and then there's what we call universal policy. So a straight universal policy. These policies were designed because term life policies weren't enough for what people wanted to do. And then whole life policies were a little bit expensive for some people and what they were trying to do. So they came up with this idea of marrying the two, the whole life and the universal. What whole life does is it takes into consideration all of the premiums spread out over the whole life of the policy. And so that's how it's priced. Universal policy does that, but it doesn't take into account, they don't spread the premiums out over that time. What it does is that policy builds cash value, and over time it uses the cash value as the rising cost of insurance goes up to pay for the policy. So the policy might last to age 90 or age 80, but rarely will it last to age 100 and beyond, unless you pay more into the premiums. The other thing about universal policies is that the premiums are flexible. If you miss a payment, it'll just automatically take from the cash value until there's nothing left to pay for the premium, and then it lapses. So those policies really have to be watched and really have to be monitored, and you have to do your reviews every year and look at them and make sure that you know what they're doing. Is that too much information?
No, that's actually great because you're explaining the different types, which we need to know.
Right. But it does. There's a lot more that goes into it. So, and universal policies have a lot more expenses, so that with your whole life policies, you can definitely pull out cash value. And here's something that I wanted to mention too. So typically when a person passes and you go to the funeral home or you go to the mortuary and you present your life insurance policy to them, they'll take that life insurance policy for those arrangements. But they have to wait until the death benefit, the death certificate comes back, and the life insurance company will say, okay, we have the death certificate, will pay out. So you assign those policies to the mortuary, but now here's what people don't really realize is now the mortuary ha- sends that to a third party to handle that paperwork and that process for them. And they charge 10%, 9 to 10% of whatever the death benefit is to handle
Wow.
that process. Yes.
Wow.
I found
Wow.
this out about, yes, they charge that much for that. So having a pre-needs policy is worth it to help keep you from and we'll talk about that, to keep you from paying those
Yes.
extra expenses. Yes.
Mm-hmm.
Or if you have a policy that's a whole life policy, here's what can be done. Say I'm the owner of my policy and someone else is the insured. I want to make sure that I have another person that is designated as a successor owner or a co-owner on that policy, because what you can do if you have a whole life policy and there's enough cash value in there, say a funeral costs $20,000 and you or $10,000 and you have
Mm-hmm.
15 in your policy, that person can access that even though you've passed away. They are
Mm-hmm.
the owner. They can access that cash benefit, go pay for that funeral, and then still, when you get that death certificate, then now all of that money is paid out to you. And it might minus the cash value. That's okay. Or depending on how that cash value is in there, if it's in there in the forms of dividends, that's just money that's there like a savings, and you still get the entire benefit. So it just depends on how the policy is structured and what that cash value looks like. And again, having an insurance agent at that time will definitely guide you through that process and help you with that process. And I know that's new to people, but that is definitely a strategy that we use and we talk to our clients about when they have that whole life policy. Yeah,
Mm. That's important to know, especially when it comes to that 10% of your whole death policy. They would get
10% of
that
your death.
entire part, and so that's where the pre-planning comes in.
Absolutely.
And you do those too. So can you explain the pre-planning as well?
Yeah, so the pre-planning or what we call the pre-needs, and not to be confused with the life insurance or burial policy or life insurance policy. A pre-needs policy actually uses the mortuary of your choice. I work with one mortuary. I don't work with all of them. I work with House of Winston, and same thing. She's, the person that owns that is, a sister in the Lord, and so, and she's very integral. But what we do is we have a price list. We look at the funeral costs, whatever you desire that you want to have. If you want cremation, if you want a burial, you want your traditional burials, whatever. We look at all of those costs and then we say, okay, you can pay for them fully up front. And if
Mm-hmm.
something happens 20 years down the line and now you paid for a $10,000 funeral and that funeral costs 30,000, they have to honor what you've paid for, period. So
Wow.
it's
Okay.
contractually, yeah, they have to pay, they have to honor it. And the way that they're able to do that, when you purchase it and when you pay that in full, or you could pay it monthly payments, they purchase a life insurance policy for you. It's a certain type. It's not like your traditional life insurance, but they purchase an insurance policy so that that same thing, that death benefit will grow along
Mm-hmm.
it, inflation wise, so that it covers the mortuary's costs at that time. So
Mm-hmm.
you're only paying 10,000, but it's growing a little bit more and a little bit more every year, so that it'll cover that amount when something happens. Now, the great thing too about that is if a family, now when you decide what you want for your funeral, it has to be honored. It's contractual. So
Mm-hmm.
family members can't fight over what you want because you've already put it in place. You all they have to do is go to the mortuary, present the policy, and say, and the way we do it, we put that a copy on file at the mortuary so that they have it all the time because things get lost. So they
Right.
go to the mortuary, you present it, and they pull it up. Here's the contract. Here's what they wanted, down to the color of the casket, all of that. Where this, sometimes you can put in there where you want the service. You can put all of those things in there too. You don't have
Mm-hmm.
to, but you can. But everything is paid for and everything. All you do is show up and they help you, through that process. But it's a very easy process. And again, you pay for it in advance. They have to honor what you've paid at this moment when you got that policy. They're very
Wow.
simple to do. Mm-hmm.
Okay. So that's really good. Okay. So
Yeah.
what happens when say for instance someone has signed up for a life insurance or term whichever one, universal
Virtual.
insurance out of the three, when does it become effective? So say they sign up
Yeah.
today.
Hmm.
When does that policy become effective, generally speaking?
Generally speaking, with the life insurance policy, if you give them a payment, you have what we call contingent or temporary coverage, even
Okay.
through the underwriting process. So if a person passes uh, applicant, before that application is approved and they have a payment, they have to pay that benefit because they took a payment.
Mm,
So again, immediately and the company can't fight it or anything like that. Even if you knew that you were going to have a heart attack or whatever, if they take an application, typically if they take premiums with that policy, they have to pay it.
mhm,
In some cases, a company won't even take a premium because they know that by law they have to pay those policies. So if you're, say, for instance, for like myself, I've had a pacemaker put in, they wouldn't take a premium from me because
mhm,
chances are I might pass away before that application is completed. If you're a certain age, like 80 or something, well, we don't offer them after 80, but like if you're 75, typically they won't take a premium from you as either, because they know they have to pay those. But if they take a
mhm.
premium, you're covered immediately for at least 90 days while they're going through that underwriting process.
So you said they don't take a premium at age 80 or
Well,
75?
yeah, because at those ages, unless it's a smaller policy, like a $50,000, but if I'm trying to get 100, 200,000, a million, something like that, they won't take a premium from you. Because again, what they don't know is, your health. And so
Right.
it's a way of mitigating losses for an insurance company. But under those ages, yeah, they'll take a premium from you, unless again you've had some major issues, and a company will say, no, don't take a premium from it. It rarely happens. It's
Okay.
maybe only happened with me maybe 3 or 4 times because of a person's health. There are certain
Mhm.
questions that we ask, and it'll say, don't take a premium from this person, but they'll take you through
Mm.
the underwriting process
Oh,
to see if they can insure you. And then
oh,
once the underwriting process is finished and they take that payment, uh, it becomes effective either immediately or, so for instance, if I did a policy a month ago and they just got around to approving it,
mhm.
if I decide, if I, when you sign the policy, you can decide that you want that date of application as your policy date or that you want the current policy date. So whichever you choose, that's when your policy is effective. Now, there are policies that are what we call guarantee issue policies, and these are what you
Mhm.
might be speaking about. So guarantee issue policies are policies for those persons who can't qualify for a traditional policy. You've put in an application and an insurance company says, no, we can't insure you. Then we have companies that are guarantee issue policies, and they'll give you a policy without putting you through any underwriting. They automatically approve it, but there is what we call a 2-year contestability period. So it's
Mm.
2 years that they won't pay on that policy if you die between in that time. But what they will do, they take your premiums, and if something happens to you in the midst of before that 2-year period is up, they'll give your beneficiary all of the premiums plus 10% back. So if you've paid $5,000, in that 2-year period, they're going to give you 5,005, what 5,500 or 5,000, yeah, 500. Um,
Okay.
is it 5,500? 5,050. That's 10%. 5,050. So that's how that works. But if on that day after that 2 years,
Mhm.
they're going to pay the entire amount. So,
Okay.
and those
Okay.
are policies that for people who are what we call uninsurable
Mm.
policies. So they do have those out there. And then just remember that anytime you see a commercial and they say there's no medical underwriting questions, just know those are guarantee issue policies. They're going to cost more because
Mm.
there are no underwriting questions, and there's going to be that 2-year contestability clause in there.
Okay.
Yeah. And
Okay.
yeah, and I do want people to understand that before, don't be afraid of talking to us. and letting us help you get a policy. Because when you go on and you get those policies from, these different people on TV and things like that, and they say it's 9.99, a day, 9.99, you can get insurance. That's 9.99, probably 1,000, or 9.99,
Right.
500, something like that. When you can
Mm-hmm.
get it for much cheaper because you go through underwriting. And
Oh.
now, yeah, and now companies are doing fewer medical exams. Our company, New York Life, for anything under 2 million, they try not to do medical. If they can get all of the information that they can get from your doctor, from here. Okay, so let me go back to the process. When we do the application, we hit a couple of databases. We hit your driver's, the DMV, which tells us whether or not you're a reckless driver.
Mm-hmm.
They hit a prescription drug database, which tells them what types of prescriptions you're taking so that they can kind of guess at what's going on with you medically. And then they hit what we call an MIB report, which I encourage everybody to pull. The MIB report is the Medical Information Bureau, and it has all of this information. Say if you had a heart attack, that information is there. If you've been declined for insurance from any other companies, that information is there. So they'll hit those three databases right away. And if they don't see anything that concerns them, chances are
Mm-hmm.
they'll go ahead and approve it without doing a medical. But if you're a smoker, if you answer certain questions certain ways, then they may ask for a medical, and they'll, do medicals for you. If you say, hey, I smoke marijuana, but only recreational, they'll approve it, but their chances are they're going to come and do a medical because they really want to know how much you smoke. So, and
Okay.
if you're doing anything else. So
Mm-hmm.
chances are they will do a medical. But yeah, but typically they try not to, and they do the underwriting process fairly quickly now.
Mm-hmm. Okay. Oh, that's good. So if it's under 2 million.
Under 2 million with New York Life, they'll try not to
Okay.
do a medical. Yeah, I just did. I did another 500 with my daughter, and they approved it in maybe they approved it in a couple of weeks, maybe a week or so. And they didn't
Oh,
ask any, they didn't do any medical
question.
or anything like that. Well, yeah, they asked medical questions, but no medical. She didn't have to do, like the blood in the urine or anything like that, because there's
Okay.
nothing that concerned them there. Yeah.
We have a question in the chat. Someone's
Sure.
asking if you don't have children and your parents pass, who should who should we put as beneficiaries? What's your suggestion on that? What have you seen in your experience in the best way to kind of answer
Mhm.
that for them?
Hmm. So I would ask, one of the questions that I would ask, and we would, take a look at, is what are their income? Who is their income going to support? Who depends on their income? That's going to be, if they don't have any children or anything like that, who depends on your income? Um, is there somebody who will take care of those final expenses when something happens to you? Is there somebody that you trust to do that? So if you have a house, who do you want to leave that house to? And if you're leaving that house to somebody, do they have enough money to sustain it? Do they have enough money to do what they need to do with it? So we're going to talk about those kinds of questions. And those people who are generally going to be responsible for things like that are people that you want to leave life insurance to. And if not, it could just be your favorite nephew, or it could be your sister, or it could be a cousin. It could be even be a friend. So we'll have those conversations about, what your goals are, who you love, who means the most to you. And we'll, we don't really make recommendations, but we'll help you think about what that looks like if something happens to you. What do you
Oh,
need to happen? That will help you think about those things.
okay. So very good. So they give you a guideline pretty much to see
Mm-hmm.
what will be best for you individually. We have another question. Do you do living wills or trusts? Is
I
that part
don't.
of your formula?
Here's what we do. I don't do living wills or trust, but here's what New York Life has, and this is new. This came out about 4 or 5 months ago. We have what we call empathy. Empathy is a platform that New York Life worked with a group of attorneys and accountants, and it's on a secure encrypted platform, much like your bank accounts and things like that are encrypted. And what it will do is it will create for you a living will and testament. It will create a power of attorney document. It will create the the durable power of attorney, the healthcare directive, and also the funeral directive. So it'll create 4 documents for you absolutely free. You have to be invited to the platform, which means that I have to invite you to the platform. And I invite people to the platform and to use the platform with the expectation that we will talk to you and guide you through this platform. I don't just give it and say, "Hey, go get it," because what I found that happens with that, we invite people and they never go do it. So if we invite you, we want to show you how it works and all of the other resources that are on there, because there are videos that talk about beneficiaries, how to name beneficiaries. There are videos there that talk about trust, what should go in a trust, and it's a part of our legacy planning, our legacy planning. So when we do trust planning and we do estate planning, all of
Mm-hmm.
these documents, our estate planning department will look at and review our clients' documents. But we also found that some people are not ready to actually do a full-on trust, or they can't afford to do a full-on trust, and having these documents are vital if you're not ready to do that or can't afford to do that right now. Because the last will and testament, it is contestable, but at least if something has to go to court, it gives the judges an idea of what you were thinking about. Somebody might
Mm-hmm.
say they did it, but that's not what they mean. But at least it gives them an idea. Most people don't contest a will. We know we see that in on TV all the time, but a lot of people don't contest because people don't have the money to contest those things sometimes.
Mm-hmm.
So
Mm-hmm.
because it takes money to take people to court. So
Right. I
yeah,
think
but
some
we
people are
will do
trying.
that.
I think some people are trying to look at ways to not have to go to probate court. Go to probate. So is that a way also to do that?
No. So if you have property over a certain limit, and if you have a home, actually, especially if you have a home, you want to have, and you have a lot of assets. So, for instance, my cousin had, and she passed suddenly as well. She worked for TSA, and right before she was retiring, she went to work, went out of town for an interview, was in the car getting ready to get out, and she passed away in the car.
Mm.
Driver looked around and they couldn't wake her up. She had a house, she had vehicles, she had 401k, she had life insurance, she had a couple of other accounts. She had to go through probate. In California, you're going to go through probate if if her husband's name was on the her ex-husband's name was on the house, it wouldn't have had to go through probate. So if you have a co-owner, it doesn't necessarily have to go through probate. But if there's no co-owners of all of these things, is going to have to go to probate to see who, especially the house and all of the assets. Now, the life insurance, her mother, because her mother was named beneficiary at work, her 401k and things like that went to her mother because they were the next of kin. But the house and all of the other assets had to go through probate. And I can tell you that that probate cost them, because I talked to the attorney before, it costs about 30% of whatever the assets are, you know,
Wow.
sell for. So it's
Right.
not cheap. It comes out of the assets, the sale of the assets, but it's not a cheap process, and it's a lengthy process as well. So no,
Mm-hmm.
a will would not keep you from going through probate in the state of California when you have certain assets. But I would also sit down and speak or call up an attorney. If you need a state attorney, I can, probably give you like 3 to call so you can choose. And they'll answer your questions for you. Just answer questions. And also, as a part of the empathy, the life plan that we have there are attorneys that New York Life or that platform can refer you to in your area as well, who will
Okay.
actually pick up a phone and answer those questions for you.
Oh, okay. That's good to know. And so we
Yeah.
do know like a trust has to be funded. So can you give an example of how you fund a trust for
You
those
are
that
so
are here?
smart. Oh my God. Most people don't know that. Most people are oblivious to that fact. having a trust is a good thing, but if you don't fund a trust, it's just a document. So here's what we
Mhm.
mean by funding it. So you have this house, right? And this is one of the great things about the things that my cousin had in place. So she had this house, but going through probate again is about $30,000, and it has to come out of the assets. But there are certain things that you have to do and pay for before all of that happens. And here's the thing about it: if they sold their house, but if they had not sold the house, then it meant that there were all these different things that needed to be taken care of that are going to cost money. So, for instance, let me go back to another example. Um, One of my other cousins was named executor to her cousins, to her neighbor's estate. This neighbor had the house that was across the street from my neighbor, from my cousin, and she had income property, rental property. Well, that person's income, all of her personal income, was supporting those properties. So when she passed, her income stopped. Now, the funds to upkeep those properties was not there. They had to sell off those assets. So what would have funded it could have been a life insurance policy, so that she died, they had $100,000 or $300,000 in there, so that the upkeep, the taxes, all of the things that go with upkeep and property could have been there to support those things. So when you do a trust, you want to think about what is going to keep this property that I'm trying to pass down to my family in the family.
Mm.
That is how you fund a trust. You can fund it with a large amount of cash. You can infuse it, put some cash in a bank somewhere, or you can, the simplest way is to fund it with life insurance, so that when you die, that life insurance goes into the trust. The executor knows what to do. You give some instructions how to divvy that up, how to, maintain the properties. If you want to give somebody something, you name all of that in the trust. But yeah, that is a fantastic question. How do we fund the trust?
Okay,
How,
so which of the life insurances, the universal, the whole? I know term won't do it. Term will not because it ceases. So, like, which would you recommend for those who are considering having a
funding
will,
this
a
trust?
trust, and funding their trust? What would you? Because we're going to have them, reach out to you.
Yeah.
Those that are interested. But these are like the questions right now because there's so many people passing away
Mm-hmm.
unexpectedly, and so many of us are unprepared for these things. Where did your houses go? And some people are dealing with right now parents' property and having to clean
Mm-hmm.
things up, and who gets what. And I have family in Virginia, and it was a family house. And so because it was the family house that went down, to legacy, so it was three other family members that thought that they were so closely involved. So one of the family members thought that she could just sell it. Well, the nephew, which was the son of the sister who had passed away, he's like, "No, you can't sell
Mm-hmm.
my mama's property because my mama," right? And
Right.
so they went through this probate, and she was so
Right.
angry because she thought that she had rights to do it, but there were other siblings and their children involved. So,
Mm-hmm.
what's kind of like that best way to take care of something like this so it won't be that at the end because they lost so much money from the probate. They lost a lot.
Yeah. And see, this is why it's important to get an attorney involved, because just
Mhm.
like me as a financial professional, I know the questions to ask you. I know I've seen scenarios play out. So I know to ask you, if you're married and you have, stepchildren, I know to ask you, what do you want that to look like? I know to ask those questions. An attorney knows, because my mom's
Mhm.
attorney asked this question of my mom. So what she wanted to do with XYZ. And my mom asked her, which one of your children are going to be the most likely to object to everything that, she asked her those questions. She says,
Mhm.
well, what if certain things happen? What if this child is mad with that child? Those questions. So they're
Right.
going to ask. And absolutely what we don't think about when we think about legacy property, because this is one of the problems that is going on with some property that my mom has. Um,
Mhm.
there is so many people in this property, because my grandparents had, oh my gosh, 11 children. Well, no, take that back. Seven, 6 or 7 children. One of my aunts had 11 children.
Mm.
And they're all my mom's age, so they're 80. So you know how many kids this comes down to. There are so many people in that property. That property is just sitting there. So one of
Mm,
the things that we told my mom was that there's six of us, and she has property in Arkansas, Louisiana. Here, one of the properties in Louisiana, since my sister lived in it, just give it to her, because what's going to happen is if we all are in it and something happens to her, then that means all six of us and all of our kids and all of our kids. So legacy property has to have, like you said, it has to be funded, and it has to have a way to sustain it. And those questions about how those types of things will play out need to be discussed with an attorney, and it has to
yes,
be spelled out in that trust. Do you
right.
want us to sell it? Do you want us to keep it? And talk to your children about that, because Arkansas, I would go down to Arkansas, but most of my siblings aren't going to Arkansas. So it's
Mm-hmm.
just going to be sitting there. You
Hmm.
know what I mean? So
Right.
I would definitely, especially talk with an attorney, because they know, again, the questions to ask. And I'm not talking about somebody who does it, uh, who is not an attorney and doesn't do this for a living. Somebody who does this probate stuff for a living and has seen all of these scenarios play out, and they know what to ask you. I would definitely speak with someone like that.
I'm really glad that you're explaining this because in this internet world, everyone's doing a DIY, do it yourself.
Mm-hmm.
And then they don't understand that when the time comes, the information is no good pretty much because it wasn't funded, there was not it wasn't detailed. They need an attorney to walk through this process with them. So I'm so glad you're
Absolutely.
here tonight, and I hope everybody got something that they needed. So how can somebody reach you if they wanted to connect with you for the life insurance, all the insurance, the pre-planning, the pre-needs, and even for the trust will, the referrals that you have, the guides that you have available? How can they reach you?
Yeah, really, really, really easily. You can find me on Facebook, Instagram. You can call me. I'll give Helena my number, and let me just say it real quick. So my work cell is 562-653-6758, or you can simply Google my name, Alfreda A. Jones Moore, and my information will pop up. My actual website, my LinkedIn, and my professional Facebook page will pop up. Or you can reach out to Helena. People who know me know how to reach out to me. But yeah, that's the easiest way, is to call me in that. And I do want to say too that retirement planning, listen, retirement planning is so important. It includes
Mhm.
your life insurance planning. So retirement, don't wait until you get, a year out before you call me, and let's get your retirement, because your PERS, your STRS, those people are going to talk to you about the account that they have, but they're not going to give
Right.
you a whole picture of what it all looks
Mhm.
like. That's what because they can't, they're not licensed. So they can only tell
Mhm.
you about that particular portion. But yeah, I'm very easy to reach out to. So yeah, just if anybody wants to, yeah, just reach out to me that way. And if I can't help you, like you said, I can give you a referral. I don't do, the law. I'm not an attorney, and I'm not an accountant or a tax advisor. So I will always refer you to somebody who knows. I don't know everything, but I know
Mhm.
somebody who knows, typically.
Mhm. Very good. Okay, very good. All right, so one last question, because this is the death talk. If there was something you wish you had have told somebody, I know out of all the multiple things you could have said, if there was one example that you had in your heart that's closest to you that you wish you could have told somebody before they left, what would that be?
You know what? I would have told, when I first got into this business, I would have told everybody, every single person, what I do, how I do, and why it's important. Because we pick and choose who we tell what we tell to. And we do that because we don't want to bother people. We don't want to harass people. We don't want people to see us come in and walk the other way. But I have gotten to this point in my life. I don't care that you see me walk the other way, because you need what I know. You need to know what I know. You need my help. And if you reject that help, okay. But if I don't tell you, I'm never going to be put in a position ever again in my life to where I didn't say something.
Mm. See, that's powerful. See, this is why we have Alfreda Jones Moore here tonight. She has that integrity and she has a heart for the people. And so, again, if you want to contact Alfreda, you can find her on Facebook, you can find her on LinkedIn, look on your internet, you'll be able to find her. So, we really appreciate you for coming on tonight. And all this information was important. And so, we really appreciate you. And we thank you, thank you, thank you for taking the
Thank
time
you.
to come and explain these things to us. Now, next week, we'll have another person presenting. And so we will see the different perspectives when it comes to the Deaf Talks. Thank you, everybody, for joining us, and have a good night, everybody.